Alright folks, let's talk about an exciting trading strategy that could take your profits into the next level, the profitable buy-sell indicator strategy. We're going to walk through it together, sharing some backtesting results so you can see how it's performed in action. To get started, we'll open up a chart on a platform like TradingView. For this example, we'll be looking at Bitcoin USDT using a 5-minute time frame. Now we're going to add a key ingredient to our strategy, the Smart Money Breakouts indicator. Adding this handy indicator to your chart is breeze on TradingView. Just look for the indicators button on the toolbar at the top of the chart. Then click on it and a little window will pop up. In the search bar within that window, type a Smart Money Breakout. After hitting enter, you'll see a list of results. Simply find the one you want and click on it to add it to your chart. This powerful tool is the Smart Money Breakouts indicator, designed to help us identify breakouts based on changes in character (CHOCH) or break of structure (BOS) pattern. Having this kind of insight at our fingertips can make a significant difference in our trading decisions, enabling us to capitalize on market trends more effectively. Now that we've got the Smart Money Breakouts indicator added to our Bitcoin chart, it's time to take a closer look at the strategy itself. Alright, let's dive deeper into how this Smart Money Breakouts indicator works its magic. Essentially, it's like having a secret decoder ring for the market. It scans the chart, hunting for crucial levels known as CHOCH and BOS levels. These are like key turning points where big money is likely to make their moves. Once the indicator spots breakouts above or below the CHOCH level or BOS, it's like a flashing neon sign saying buy or sell. The best part is that it doesn't just give you the signal, it also points you the potential profit target, helping you lock in gains. But before we start racking in profits, let's fine-tune the indicator a bit. In the settings window, you'll find a few parameters we want to tweak. First, let's set the length parameter to none. This will adjust the sensitivity of the indicator. Next, we'll change the type parameter to body. This will ensure the indicator focuses on the main body of the candlesticks. To manage risk effectively, we'll set the risk to reward ratio to 1.5. This means for every dollar we risk, we're aiming for a potential profit of $1.5. We'll also switch the stop loss type to high or low. This will help us set our stop loss order based on recent price swings. And finally, let's enable the SL option to automatically place our stop loss order. As for the style, you can customize the lines and colors to your liking, but for now, the default settings should work just fine. With these adjustments, we're ready to harness the power of the Smart Money Breakouts indicator and start making some serious money. Okay, so we have a powerful tool in our arsenal with the Smart Money Breakouts indicator, but we're not going to rely on it alone. To add an extra layer of confirmation and help us identify the overall trend, we're going to introduce another awesome indicator, the Double Ribbon Indicator by Chart Prime. You can easily find this indicator in the indicator section of your charting platform. Just search for Double Ribbon and select the one created by Chart Prime. What's so great about the Double Ribbon Indicator? Well, it's basically a visual feast for the eyes. It takes two sets of simple moving averages SMAs and wraps them into a colorful ribbon. This ribbon can tell us a lot about the market's current mood. Now let's dive into the money-making rules of this strategy. It's all about timing your entries and exits to maximize profits. When the market is on an uptrend, the price candles will be comfortably above the double ribbon indicator. This is our cue to focus on buying opportunities. We're looking for bullish breakouts of the CHO or BOS levels. Imagine these levels as strong support or resistance levels. So, when we see the price breaks above one of these levels, especially in an uptrend, it's a strong signal to enter a long position. This means we're buying with the expectation that the price will continue to rise. The beauty of this strategy is that it doesn't leave you guessing about where to place your stop loss and take profit order. The indicator has already drawn those lines on the chart for you. You simply need to set your stop loss slightly below the SL line to protect your position from potential downside moves. And your take profit target should be set at the TP line, which is calculated to provide 1.5 risk to reward ratio. When the market is trending downward, the price candles will be below the double ribbon indicator. This is your cue to focus on selling opportunities. You're looking for a bearish breakout below the BOS or CHOCH levels. A breakdown below these levels is a strong sell signal. It indicates that the downward momentum is gaining a strength. Once you identify this bearish breakout, you can enter a short position expecting the price to continue falling. To manage risk, set your stop loss slightly above the SL line. This will protect your position from potential upward price movements. Your take profit target should be set at the TP line. Okay, let's get down to business and see how our strategy performs in the real world. We decided to put the strategy to the test on the 5-minute Bitcoin chart, running a total of 300 trades to gather some solid data. And guess what? The results were pretty impressive. Our strategy boosted a winning percentage of 71%, meaning the majority of trades were profitable. Over a 16-week period, we managed to achieve a whopping 894% profit increase, all thanks to our dynamic duo of indicators. To put it into perspective, our profit factor was a solid 3.67. This means that our profits were more than 3 times larger than our losses. That's a pretty good return on investment. During the backtest, we even experienced an impressive streak of 8 consecutive winning trades. Of course, we had a few setbacks along the way with 4 consecutive losses, but even with those dips, we still managed to maintain an overall max drawdown of 3.94%. These results are encouraging, but it's important to remember that the past performance is not indicative of future results. Market conditions can change rapidly, and what worked in the past may not work in the future. It's crucial to always use risk management techniques, such as stop loss orders, and to adapt your strategy as needed.